In this video, we'll talk about Section 80 income tax deduction. So you know all the important section, which is very, very important for income tax exemptions and deductions. So you can see these are the sections: Section 80, Section 80 CCC, Section 80 CCE, Section 80 CCD, Section 80D, Section 80 double D, Section 80 double DB, Section 80E, Section 80 double E, Section 80 EEA, Section 80 EB, Section 80 G, Section 80 double G, GGB, and Section 80 GGC, Section 80 TA, and Section 80 TB, and Section 80 U. These are the important sections. Let's go through one by one. So these are the important sections which will really help you to save your tax. So first is ATC, as all of you our ATC covers your PPF, your RPF, your SPF, which is Public Provident Fund, and PPF is Public Provident Fund, and your NSC National Savings Certificate, your LIC premium, SSY, your Sukanya Samruddhi scheme, and your National Savings Certificate NSC. All this will cover, and your housing loan principal, which will come under here, which is up to 1,50,000. Then payment towards pension fund, which is again 1,50,000, 80 CCC. Then 80 CCD 1, payment made towards Atal Pension Yojana and other pension scheme notified by the central government, which is 10% of basic salary, or in case of self-employed, 20% of gross total income. Then 80 CCE. So all of you know 80 CCE, which all together combined of 80C, 80 CCC, and 80 CCD 1. All these three sections, 80C, 80 CCC, and 80 CCD 1, all together inclusive of maximum deduction can be claimed as 1,50,000. Apart from 1,50,000, there is a separate section. As I told earlier, many people, I have noticed, and you would have noticed, many people are putting in 80C, 80CCC, and 80C more than 1,50,000. I have seen many people invest 5 lakh. So if you invest 5 lakh, you will not get any income tax benefit. So you should restrict 1,50,000. Your PF, take an example, 90,000. You put only 60,000. As all of you know, employee PF, which comes under also, which is called as EPF, Employee Provident Fund, which comes under ATC. There is a separate section, 80CCD 1, which is investment on NPS, National Pension Scheme, which maximum 50,000 you can do. Then 80CCD 2, which is employee contribution towards NPS, National Pension Scheme, which is additional 50,000. So it means 1,50,000 plus 50, 2 lakh you can claim. Right. Then next comes to 80D. 80D is medical insurance premium paid for children, spouse, and parents above 60 years. So for below 60 year, it is 25,000, and premium for above 60 year, 50,000. Some senior citizens, those who have not gone insurance premium, they can claim medical expenditure, their medicine bill up to 50,000. 80DD, medical treatment for specified disease like for which is disability is greater than 40 percentage, you can claim so greater than 40 percentage, and less than 80 percentage, you can claim 75,000. If disability is greater than 80 percentage, you can claim 1,25,000. Whether you spend or doesn't spend, it is not important. Any disability you have, you can directly claim in income tax exemption. 80 DDB, medical expenditure for specified disease. 80 double D is for disability. 80 DDB is for specified disease. Specified disease is for less than 60 year, 40,000 or actual amount paid. Suppose you spend 50,000, you can claim 40,000. Suppose you spend 30,000, you can claim 30,000. Actual amount spent. For more than 60, specified disease, guys, it covers like cataract, cancer, AIDS, everything cover under specified disease. 80U. So difference between 80DD and 80U is 80DD is not individual. You can claim for your spouse, children, dependent parent, or your own parent, all this you can claim. 80U is for individual. If an assessee himself who is doing job, he himself is a disability, he can claim under section 80U. Similarly, there is another section called as 80E, deduction towards interest on higher education loan. If anyone taken their parent, their children, or for any himself taken any education loan, interest period you can claim. So 80 double E is deduction respect of interest loan taken on the residential property. So like 50,000, as you know, under section 24, we are claiming 2 lakh interest portion. This is an additional 50,000 you can claim. 80E is additionally 1,50,000 you can claim. 80G is deduction in respect of donation. Then 80 GGB. 80 GGB is contribution by to the political parties. You also can claim 80 GGC contribution by an individual. I mean, 80 GGB is any company is contributing towards political party. 80 GGC is any individual taxpayer who is contributing to any political parties. They can claim. 80 RRB is deduction in income by royalty of a patent or copyright. That also you can claim. So these are the simple deduction which you can claim. A layman can say standard deduction 50,000, section 80C 1,50,000, section 80D is medical insurance 50,000, 80CCD 1B is NPS 50,000, and HRA 1 lakh without PAN number you can claim. If you have PAN number, your HRA eligibility is more, you can claim. Section 24 is your housing loan interest, which is 6 lakhs. You can claim. I mean, a layman can claim 6 lakhs without going other section. So this is a simple formula. So thank you so much. Thanks for watching my video. Please like, subscribe, and share with your friends. Thank you so much. It will motivate me to come up with more videos.